Hi everyone, Kathleen Brooks here, Research Director at XTB in London. The markets are trading with a risk-off tone on Tuesday. US stocks fell on Monday and that has hit Europe on Tuesday. The FTSE 100 is down more than 0.5%. The reason seems to be a recalibration of the US interest rate cut expectations. There's now a growing chance that the Federal Reserve may not cut interest rates when they meet straight after the US presidential election next month. The market now expects an 11% chance of no rate cut at the Fed's November meeting. Now, this might not seem like a particularly high chance. However, the prospect of no rate cut was virtually unthinkable only a week ago. So it's a big shift in the market narrative. There's a lot of uncertainty right now. The US election is coming up, the UK budget takes place next week, and it's the biggest week for Q3 earnings season. UK banks are in focus, and some high-profile US companies will also report results, including Boeing and Tesla. Right now, Q3 earnings season has got off to a good start, with US banks smashing forecasts and reporting very strong Q3 results and giving positive outlooks for the rest of the year. In fact, 90% of US financial companies have beaten expectations. However, as 20% of the S&P 500 is scheduled to report results this week, we're all on surprise watch. Negative earnings surprises can move stock prices. So if Tesla disappoints forecasts, then this stock could sell off sharply, especially since the market is upbeat about its earnings report. The bond and FX markets are also worth a mention. Global sovereign bond yields are rising again on Tuesday as the focus shifts to a more hawkish Federal Reserve and a focus on high global debt levels. Now, this is causing volatility in the FX market. The dollar is the top performer in the FX space in the past month, and is higher by more than 2.5% versus the euro and the pound. Sterling dollar is still selling off on Tuesday and is currently below 130. This pair is testing 129.80, which is key short-term support. If it breaks this level, then 126.80, the low from August, comes into view. The pound is lacking an anchor right now, as are many other markets, including some stock indices. And that's why gold is rallying and has made another intraday record high on Tuesday. Gold is only $267 away from the key 3,000 level. It's higher by more than 40% in the past 12 months, and the path of least resistance could be further gains, as there's so much uncertainty in the world right now, including the outcome of the US presidential election, inflation fears, and geopolitical tensions. That's it for now. Thanks for joining.